Good afternoon from the Shreveport office of Eagle Financial Management Services this beautiful Friday afternoon. I think it's not going to be so beautiful next Friday afternoon because we've got, what's the name of that thing? Ida? I don't know. There's a big storm that looks to be coming right at us, and it could make it to the Baton Rouge area as a Category 4, they're saying right now. So we don't really need this in Louisiana right now. But the stock market today was closed much higher, making all-time highs again, William. And this is after yesterday we had over 100 people killed in Kabul. A lot of distraught Americans. Stock market traded down as the day went on yesterday. And then today we go right back to new highs.
It was the strongest day in a month.
Today. Yeah. It seems that all that matters is low interest rates right now because that makes the stock market the only game in town. If you can't earn anything in the bank or on CDs in the bond market, what's left is, for most people, things like stocks and commodities. So, and then we have the Jackson Hole Federal Reserve gathering in Wyoming, and Jerome Powell spoke this morning. Smoked this morning.
Yeah.
And one headline that I read called it a dovish nothing burger speech. So bond yields went down and stock market went higher. As if you're going to make even less on your bond. People rotated out of bonds and said, we don't need to fear the bond market today or higher yields. Jerome Powell is kind of full of it again. I shouldn't say that. So there, basically the gist of what he said, there's been a lot of unrest and concerns about the taper tantrum, taper tantrum. We should explain what that is for our viewers, but that means cutting back on asset purchases. In this case, our Federal Reserve has a balance sheet now that is over, I think it's $8.3 trillion, something like that. And so, with the last subprime crisis, we had gotten up to about $4.5 trillion, and then things got better, and they knocked the balance sheet down to about $4 trillion. So the next crisis comes along, and we very quickly, with this pandemic, got to we basically the balance sheet doubled, and so now they're still doing the asset purchases to try to help the economy. There's a lot of controversy about this, but this isn't really what we wanted to talk about today.
But it is. This is a problem that we're having, not just with the Federal Reserve and its intervention and manipulation of financial markets. This is problematic because it's symptomatic of people's dependency on government all across the board. And so everyone gets addicted to government support. And then when the support dries up, we have tantrums.
And we have irrational exuberance and irrational expectations, whether it's in Kabul or whether it's with the direction of the stock market. So, and we believe we grew. Bill and I each have MBAs and undergraduate degrees in finance and economics. And we believe that ultimately markets will determine prices, not governments. They can do it temporary, but it is temporary. So with that, the S&P 500 set a new high today. It closed over 4,500, up about 0.9%. That makes the stock market up about 21% so far this year when you include reinvested dividends. The Dow up about 0.7% today. The NASDAQ Composite closing again over 15,000, up about 1.25%. The Russell 2000 small cap index was up well over 2% today. So safe havens rallied sharply. Oil was up sharply. Cyclical stocks were up strong today. Defensives were down. 2-year Treasury note yield was down to 0.23. The 10-year at 131, and the 30-year down to under 2% to 1.92. Silver was up approximately 2%, closing over 24. I don't know if I shouldn't say closing. I think those markets trade all the time. And gold closing up over 1% at about $1,820 an ounce approximately. So, well, Bill, we didn't meet last Friday, but the week before, we felt we brought you part one of a discussion,
A series
of discussions, really about what we do, what our process is. And 2 weeks ago, we basically, to hit a couple of the bullets, we covered client onboarding. Why are you seeking out our help at this point in time? Why would someone come to us? The recognition of the need to save on a long-term basis, or what someone do if they come into extra money. You know, what do you do with your money? You have to do something with it. And then the desire, basically why someone comes with us, another reason is the desire to earn higher returns than what's available in from the bank, annuities, and other places like that. So where are we going today, William?
Well, we're going to continue with this series. And, you know, as Jack said, we were discussing last time, you know, why someone would seek a professional's help and different reasons why, and how we can add value there. And just to continue that discussion, you know, these are just some things that we may ask in an interview with a prospective client. But before I begin, I have to give a shout out to Wesley, our office mate. He really did detract from productivity today by getting us focused on Rick Astley, who I hadn't thought of in 40 years, something like that. Who knows?
Beautiful artist.
Yeah, not my fave, but anyway. Thank you, Wesley. So one of the questions that we may ask a prospective client in an interview is or a statement, you know, describe your strongest professional relationship, and why do you view it as a strong relationship? And this term relationship, you know, really is the core of what we do. It's defined as a state of connectivity, being connected. And the way we run our business here, it's a relational business as opposed to a transactional business. And I think a lot of people who have been around and had brokerage relationships, they're familiar with that transactional type of business. And that's more of a, you know, you, the client, you're here to serve me and my sales goals. And so I'm going to focus on a transaction, you know, a sale of a stock or a mutual fund or an annuity. But the way we do things here, it's very relational. It's not about how a client can serve us, but it's about how we can serve a client.
Yeah, and why don't you get into how we're compensated with that, Bill?
Yeah, and
so,
you know, the way we're compensated is it's completely fee-based. We are basically in the same boat as our client. So we're charging a fee. It's a percentage of the account value. And therefore, if we do a good job and grow a client's account, our compensation grows as the account grows. Conversely, if we do a poor job, our compensation declines as the account value declines. So just the fee structure alone eliminates most of the conflicts of interest that are inherent in the investment advice business or industry. Because when someone is operating a transactional business, you have immense conflicts of interest. Because the person on the sales side knows that these different products have different commissions. And so the level of commission being paid to the broker can influence the recommendations that are given.
And you take any given stock, like let's just say Pfizer. I could give you 10 reasons why you need to sell your Pfizer today, or 10 reasons why you need to buy your Pfizer today.
Yeah.
So
that's in a transactional model, just
exactly.
to generate a sale.
So if in our model, if for any of our clients that are watching, if we're doing trades in your account, it's simply because we felt like we can replace that thing that we sold with a better value.
Mm-hmm.
That's our sell discipline.
That's it. And the other aspect of a relational business model, it's we're going into every business relationship with this idea that we want to be the client's advisor forever. We're focusing on longevity in our client relationships. We want to enter into this for the long haul with the client's family and heirs. Another aspect is its vulnerability, and this is with any serious relationship. This vulnerability on our part and on the client's part. Like, for example, for us, we have to be vulnerable with our clients. A client could come to us and ask us to do something, and it may be outside of our core competencies. So we have to be comfortable and secure enough to be able to say, yes, these are our strengths, but these are our weaknesses. Another example would be accountability. We don't always get it right. Oftentimes we'll get things wrong. And so we have to be willing to tell a client that things just didn't turn out the way we expected. When we're making investment decisions, we're doing the best we can and evaluating a security based on a lot of different factors. Of course, we're looking at past performance and we're looking at fundamentals that are available now, but we are making reasonable assumptions about the future, and no one can predict that. So that means that sometimes we're going to be wrong about things. And then also there are times when we just have to be able to tell a client, I don't know. Okay, we don't know everything. And so sometimes clients have an unreasonable expectation that, we have all knowledge and that we're always right. No, we have to make guesses on things.
I'd like to interject there, William,
Mm-hmm.
that, along the lines of accountability, it's been, let's say I've been in the business since 1990. So that's
long time.
31 years. And I would say that if we get things right 6 or 7 times out of 10, we can make our clients a lot of money without undue risk.
Mm-hmm.
So,
and there are plenty of times, when we have been right on things, but we're wrong on the timing. And there's a saying that, even if you're right, if you're wrong on the timing, you're still wrong. Moving on. Okay. So what about vulnerability from the standpoint of the client? We like to say that the quality of the advice we give is in large part dependent upon the information provided to us by the client. It's like going into a doctor's office. When you as a patient, when you are open and you disclose things, to the doctor, then the doctor can give you good medical advice. It's like a financial undressing. Not every client wants to do that. Not every client wants to come in and fully disclose their financial condition. And that's fine. But there has to be an understanding that if we don't have the big picture, then we're going to be limited in terms of the advice that we give and how we operate going forward. Another aspect of vulnerability for a client would be just speaking up and being willing to say, I don't understand. We enter into these discussions with clients, and it's very easy for Jack and I to get into the lingo because we deal with this every day. It's like a foreign language, and we have to be careful that we're not talking over a client's head. But we do need our clients to speak up if there's something we're saying that they don't understand, and just say, "Hey, I don't get it. Can you help me in understanding this concept better?" Another part of a relationship is trust, and we do view trust with our clients as a two-way street. For us, our part, we have a duty to our clients. It's a legal fiduciary duty to act in the best interest of the clients and provide them a duty of loyalty. And that's something we take very seriously. And with that, we have a duty that if we say we're going to do something, we better do it. We have investment guidelines and restrictions that we may have to abide by depending upon the client's instructions and directives. We are providing service, and we may have service requests from a client, and we need to act on those in a timely manner. And another area of trust that we are responsible for is confidentiality. We are not going to disclose confidential client information to anyone unless we are legally compelled to by a regulator. We don't discuss who our clients are. We don't go around telling people that we work with this person or that person. It's no one's business. So we take that very seriously. We do have expectations of trust from our clients. And one area where, clients, really need to help us is with their expectations. So we are putting trust in the client that the client will fully articulate and, if necessary, enumerate their expectations of us. We need to be given ample opportunity to deliver upon what is agreed upon. And the client needs to understand that markets can be volatile and they don't always move in a straight line. So there has to be open, honest dialogue back and forth between us and our clients.
I could give an example there because Bill, because we've run into this often with someone like, for example, the stock market closes at a new all-time high today. Generally, we want to be fearful when others are greedy, and greedy when others are fearful. Just to borrow that line from Warren Buffett. I mean, we don't want to be greedy or fearful, but when the market's making new highs, that's when, unfortunately, individual investors generally get the most excited about the market. And the market has the most risk when it's making all-time highs. It's got farther to fall. And we could have someone, for example, come to us today and say, "Hey, I've got this $500,000 that I want to give you for the next 6 months to a year, and then
let's see how you do."
Yeah, let's see how you do. But I'm going to need the money in 6 months to a year because I'm buying a $2 million house and I'm going to need it. Well, you really, whether we're talking about days, weeks, months, or years, the stock market historically goes up 2 out of 3. So what if you picked a year, so this client gives us, $500,000, and we tell him all this, and he's like, "Yeah, I'm not really worried about that. Why don't you just go ahead and do it anyway?" Mm-hmm. Well,
but I need that money. I can't afford to lose it.
So some of these clients, and you can tell, would have a personality that they don't have ears to hear. They're just not going to be reasonable and rational.
Well, their expectations are unrealistic.
Yeah,
in that
exactly.
case, and that's a very good example. The example of having an unrealistic time frame or investment time horizon in which to operate.
Yeah, here's another one. you know, I get a phone call from a client who just got his monthly statement. Here's a good one. So he's looking over the monthly statement. This might be kind of a little bit of a rabbit trail, but this is a good point that goes with expectations. And so he looks at the right side of the holdings page, and let's say there's 3 pages of holdings, and he owns 30 different securities, and 3 of them are down. So I get this phone call. What'd you put me in this thing for that's down?
Right.
And it could be mutual fund tax accounting when it looks like it's down, but it's actually done quite well, because mutual funds are required to pass on their gains to investors every single calendar year. But, you know, generally, most of the time, it's like when something goes down, you're going to add to it if the investment case hasn't changed. But we get that. Why'd you put me in these losers? Get me out of that crap, and put me in this one that doubled last year.
Well,
So,
it could just be simple diversification, and
Right.
it's unrealistic to expect at any given time that every holding will be up. And we may have things in the portfolio that we have in there to provide us with true diversification, meaning that we want some things that can zig when other things are zagging. I think
yeah,
that's a
you know, I
simple
might even
explanation.
add, you could say if we had a portfolio that has 5 different diversified holdings in it, 3 of them over the course of a year are going to perform. Yeah, that's right in line with the market. Then one does exceptional and one does poorly. What we're typically going to do is rebalance from the one that's done exceptional and into the one that's done poorly.
But you know, most people in your example, they're going to want to get rid of the one that has lagged because it's a dog.
It's a gut wrenching thing to do,
Yep.
but generally, that's what is time tested to improve upon one's holdings.
That's it. No, that's good, Jack. You know, to wrap up, you know, the expectations, you know, of clients under the category of trust. Sometimes we do have situations where a client will not disclose the true motives behind, you know, what they are doing. We do a lot of things besides just investment management, and we get asked to help clients with things that have to do with just bigger financial issues. And we may be asked to do something that we don't agree with. And so some clients may have a fear of sharing with us the true motive behind what they're doing because they don't want to be second guessed. They don't want to be told that's a bad idea, even though it may be a terrible idea. But again, going back to the example of a doctor patient, if the patient is not being truthful with the physician, you know, the physician can't give good medical advice. And a physician needs to be able to tell a patient that's not a good idea. You may think that what you're doing is wise, but it's not. And there are times when we have to say that to a client. You know, another thing that is important that we discuss with new clients is the expectations of the clients, you know, what they like, what they dislike in an area such as, you know, the level of service. You know, we have clients who want to talk to us very frequently. They want to meet with us on a regular basis. They want to call and just ask, you know, what's going on in the markets this week, and that's fine. We love that. On the other end of the spectrum, we have clients that don't want to talk to us, that don't want to be bothered. If I need anything, I'll call you. So people are just different in that way. And so, you know, we want to try to ascertain, you know, what level of service the client prefers. But whatever level of service they prefer, we will endeavor to be responsive to them. If we get questions, you know, whether it's by phone or email, whatever, however the client communicates to us, all of our clients know that they will get a timely response from us. That is a promise. You know, something else and I touched on this earlier, is, the straight talk, because we do have a tendency to talk in the industry lingo. And I think, on one hand, we don't want to talk above them, we don't want to talk over them, but at the same time, we don't want to talk down to a client either. And, we want to be able to communicate in a way that the client understands, but we certainly don't want to belittle anyone because they don't have the information or the expertise that we have. But it really is about just giving respectful, straight talk. Another area is education. And, Jack and I love this aspect of our job, and that is educating our clients. This is a form of education, what we're doing here. We may give clients seminars, but even in just simple meetings with clients, we're always sharing what we know. We love that. And we love it when clients, want to know more. We just feed on that. But again, not everyone likes that. Some people really don't have an interest. It's not their cup of tea, and that's okay. That's all right.
Yeah.
What do you think about that? The education part?
I think it's my perspective is that we want our clients to understand and see for themselves
Sure.
that we're looking out for their best interests. And the more they understand, the more reasonable their expectations are going to be. And one thing I wanted to go back, Bill, and say about the level of care and service that we provide. Our door is always open too, whether it's a phone call or just drop in on us. I mean, generally, an appointment, works best. But if someone's not satisfied with the phone call or they have more questions, we love to hear from you.
Yeah, and we do make ourselves available after hours. I mean, we do have clients that are not available to come during normal business hours, and so we have to meet with them on the weekends or after hours, or it may be a Zoom call. We will certainly meet the client, where they want to meet. I guess the last thing I would touch on is the willingness to go the extra mile. Some call that providing concierge service. I just think of it as just high levels of service and doing whatever we can, even if it's outside of the norm. But for starters, it's just things that you would expect in a relationship. Listening to our clients, being empathetic, being a sounding board. If we can't listen and really hear what the client is trying to say, then there's going to be some kind of communication breakdown that could lead to dissatisfaction down the road. So from the very beginning, we are endeavoring to really listen and hear what the client is saying and what it is that they want from us. But going back to these concierge like services, we've been asked to do a lot of things that are outside of the norm. I love the story that Jack has told in the past about getting a call from a client who just won a boatload at the casino, and he runs over there and helps the client calculate what's the best payoff method.
$5.5 million.
$5.5 million. Do you take it in a lump sum or do you take the annuity? That's a big decision to make with a lot of money. And, that is a great example of going the extra mile. But, there's a lot of little things that we do and are willing to do. And, we may get a call from a client who wants some special reports that we don't normally prepare, that would assist the client in evaluating performance, or they may need some help from us that would involve coordination with other professionals they have, like their CPA or attorney. We often get asked to review outside financial products that we are not tasked with overseeing, but we're still going to take a look and help the client because they know they can trust us and we're not trying to sell them products. So, examples would be, we could be asked to look at a 401k account they have, or it may be an annuity or a bank product, whatever it may be. And we're certainly willing to do that. And we don't get paid extra for doing that. It's just something that we do. Can you think of some other things that we've done over the years that have been a little unusual? I've got another one I just thought of.
I can think of some crazy ones, actually, but it's interesting. I had a client today that I learned fell down at Walmart and fractured his skull. And I told him he's starting to get up there in age, and I told him I live 10 minutes away. He lives by himself. If he needs a ride somewhere, to call my cell. So I mean that goes beyond the call of duty. I think you were talking mostly about financial stuff, but
we had a client years ago asked us to assist with some expert witness work, which we did. We've had clients ask us for assistance with things like precious metals, and that's an area of expertise that we have here.
Yeah, I'll throw a little advertisement since you mentioned it as well. That's actually an area that we think is going to do very well, generally speaking, going forward. Along with we're seeing all this huge move in cryptocurrencies and precious metals, and I think cryptocurrency temporarily has kind of supplanted precious metals, but they made a big advance and then kind of went sideways for a while. But it wasn't long ago. I think from 2011 to the present, gold, for example's run from 1,100 to 1820 thereabouts today. But I think these things are going to do really well in the future. And if you'd like to like some help with that, we have an arrangement with a third party firm, and we have some expertise in that, and at no additional cost to our clients.
And that is outside of Eagle Financial Management Services. I need to say that.
We can help you with that. And, whether you should be buying bullion or semi-numismatic, an example of that would be peace dollars and Morgan dollars. So
I think we need to wrap up.
Yeah, I wandered off a little bit.
I'm hearing Rick Astley in my mind. But I'd say, to sum it up, if you're someone who wants advice as opposed to being sold, advise me, don't sell me. That's what we do. That's what we do.
Yeah, we basically live by a mantra that we are targeting reasonable returns without undue risk, consistent with what your money is for. And we've been doing this for 30 years. So
have a great Friday, great weekend, and we will see you soon.